Hello everybody, and welcome to this month's September newsletter video update. It's time for me to share with you the latest market action that's occurred over the last month and share some of the new trades that I currently have running. But before I get started, I just need to remind you that I'm not licensed to provide any personal investment advice. This video and all the charts and trades I share with you are for illustrative purposes only, and I'm just showing you how I view the current market action and sharing this with you. So let's move on over to the current market and see what's been happening in the ASX market. On the screen here in Metastock, I have a chart of the ASX 200. Now last month when I left you, the ASX 200 had a nice run up and was trading at about this level here. It was getting near resistance, and it did have a slight pullback and has had a run up again, and this time the high has been taking out the last lot of highs. Now it's still got this resistance level to contend with, which it last touched over here in mid-April. And if I look back over the chart, this resistance level was also support for the share back here. So you can see that it has touched many times back here and it got support before it broke through. And it hasn't been able to get above this level now since mid-2011. So we're heading back up to test this 4,450 mark, and it's going to be really interesting to see what happens. But the great thing is, even though the Aussie market is now getting near resistance, the US markets have actually pushed through their resistance levels. So let's check out a chart of the S&P 500 now. Here's a chart of the S&P 500. And when I last left you, it was trading below this resistance level here. Now, the US market had not been above this level for quite some time. If I zoom out of the chart, it last tested in early 2008, and the last time it traded above it was the end of 2007. So it's just broken through quite a significant level, and the next highest points are around here. And I think this is the highest point the US market's traded at. So let me look at the weekly chart. There we go. The US market has never traded beyond this level here, which is about 1,560. So it is now pushing through and getting close to that level. But the great thing is it's managed to push through a level it hasn't been at since the end of September 2007. So it's had quite a significant move. And it is currently trending up in a bit of an upward channel line. You've got it touching here with a few near touches and its last touch here. And it's also touched the top of that channel line with some near touches, and it's touching it right here now. So it could be in for a little bit of a pullback before it has its next run. But then again, who knows what the market could do? It could just surge and push through the trend channel altogether. That I don't know, and I don't try to predict what's happening out there. All I know at the moment is the US markets have made new highs and are definitely showing some healthy signs again. And maybe this will give our Aussie market some strength and push it through that 4,450 mark. So time will tell. But I certainly know there's been some nice long trades and some breakouts that have been occurring over this last month, and I've certainly been taking advantage of them. And one of the trades that I shared with you last newsletter, which I'll just open up now, was this one here. And I still have it open and active. I entered it on the 8th of August at $4.12 when it came up in my system scan. It had come up the day prior, but its volume was pretty weak and below its average. And then the next day when it came up and its volume spike was above the average, because I do like volume strength to be behind the move before I enter into it, I bought in the next day because it confirmed to me that the share was continuing to move higher and had broken through this $4 resistance level. It's since charged up, and when I last left you last newsletter video, it was trading about this point here and was due to pay a dividend out. So it did pay a dividend, and I have received a dividend on this CFD when it went ex-dividend on the 3rd of September. And what happens when you're trading CFDs is you actually receive the dividend on that date. So you don't have to wait for the pay date like you do when you trade shares. And one thing you need to do when a share does go ex-dividend is widen your stop loss up. So you can see this share had quite a gap down when it went ex-dividend. And the reason for that was it was paying out 12 cents to all its shareholders, so it will no longer have that money in its bank account. And that's why you always see that ex-dividend gap drop. Now, if the share is going to remain strong, you want to see that dividend fill itself and rise back up. And that's exactly what's happened with this share. It has now filled that gap. It did fall back a little bit, but it's rising back up. So what I'd like to see now is for it to take out these highs that it's been making over here. So at the moment, I have no reason to exit because it's just filled its dividend gap and it's back up here at its high point. And my stop loss is currently sitting at this level here. Hopefully it will push through and move higher, and my stop loss will move higher accordingly. If it doesn't and it fails, then I won't have taken a loss on this trade. I will have taken a small profit and I will have received a dividend as part of that as well. So all I can do is manage the trade with a stop loss and see what pans out in the market. And I have also continued to open up a few more trades over the last month, and I want to share another one with you as well. So I'll just close this down. So on the screen here is another share that I have open. Now, this share also came up in my scan. And when I talk about a share coming up in my scan, what I mean by that is that on the 17th of September, I ran my daily long system scan across the ASX key market, and a report comes up. And I open all the shares that come up in that report, and I view those charts. And from those charts, I selected this particular trade because it met all my trading rules. And what I mean by that is it had broken through a key resistance level. Now, it actually came up in my scan the day prior, but I rejected it. So if you see that little blue arrow there and a little blue arrow there, that's the Metastock Expert Advisor. And that means that when the arrow shows up on the chart, when I ran the scan that day, it showed up in that report. So it came up the day prior, but it actually hadn't broken to new highs yet, and I wasn't confident in entering it. The next day, it had clearly broken through, and it came up in the scan again. And this time, it had a very strong volume spike above its moving average. So I was definitely attracted to it that day. And it was the strongest signal from all the shares that I looked at from the scan. So I entered into the trade before the market closed that afternoon, buying in at $1.59 and position sizing it according to where my stop loss was sitting and my percentage that I was prepared to risk on the trade. Now, it has since moved a little bit higher, but what I would like to see is it to hold above this resistance level, because this share has not been healthy for quite some time. It has fallen very heavily over the time and now is showing some signs of health. So for it to continue to stay healthy, I need for it to stay above this resistance level and see this resistance level become support. And if it does do that and it continues higher, I will continue to stay with the trade and my stop loss will continue to move up accordingly. And once again, it's all about trade management once I have a trade open. And this all forms part of my trading plan rules in my trading plan. And of course, I can't predict what's going to happen, and I never know what's going to happen in the market, and I don't try to predict. And both these trades are two great examples to show you one that I've had running for quite a while and I still have open, and a new one that I have recently opened. And one is already in profit with its stop loss, and the other one is only just starting out. So I still don't know whether it will be a profitable trade yet or not. Of course, I hope that it is, but trading is a game and there's always going to be losses in there as well. But the whole goal is to keep those losses small. And that's what my strategy and my trading plan is all about, making sure I maximise on my winners and keep those losses small. And if you need any help in writing a trading plan or refining your trading plan, don't forget I've got my book Smart Trading Plans available, which you can pick up from my website or buy the Kindle version on Amazon. And the book comes with a free trading plan template that you can download and work through as you read the book. So if you haven't been to my website already, you can go and check it out at www.smarttrading.com.au. I have plenty of information on my website, and you can learn all about my trading systems and strategies through a course that I have called the Smart Trading Plan and System Development course. And if you have any questions, feel free to contact me. My contact details are in the Contact Us area of my website. And I look forward to sharing more information with you in my next newsletter, which will be coming up later in October. And I'll give you an update on those 2 trades in that next newsletter video update. So stay tuned for that. Goodbye for now.